Hello and welcome to SharesCard. What if I told you there's a way to buy Zepto before its IPO? Right now, shares of Zepto are changing hands in the unlisted market at around rupees 40. And if the IPO comes at the valuation, many investors are expecting those same shares could be worth rupees 70, 80 or even more. That's why everyone in the unlisted market is suddenly talking about Zepto. Just a few days ago, Zepto filed its IPO papers, taking a big step towards becoming a publicly listed company. And when you look at the numbers, you realize this is not just another startup IPO. Back in 2021, two young founders started Zepto with a simple idea to deliver groceries in minutes. Fast forward to today, and Zepto is operating across major Indian cities, serving millions of customers and is backed by some of the world's biggest investors. The company has grown rapidly, revenue has jumped sharply over the last year, proving that quick commerce is becoming a big part of how Indians shop. But growth is not the whole story. Despite growing fast, Zepto is still losing money. In the last financial year alone, the company reported losses of nearly 6,000 crores. So investing in Zepto today is not a bet on profits. It's a bet on the future of quick commerce in India. And that's where the things get interesting. Zepto is not alone anymore. Blinkit is expanding aggressively. Instamart is fighting for the market share. Amazon and Flipkart have also entered this space. Everyone is competing for the same customers. Now let's talk about why investors are excited. The current unlisted market price is around at rupees 40 per share. Based on the different valuation scenarios, the IPO price could look very different. If Zepto lists at a valuation similar to its last funding round, the share value works out to roughly rupees 47. If the company achieves the valuation, it's reportedly aiming for, the number moves closer to rupees 69. And in the best case scenario, the value could reach to nearly 85 per share. In simple terms, someone buying at rupees 40 today could be looking at a potential gain of anywhere between 17% to even 100%. Sounds interesting, right? But here's the catch. The IPO documents also highlight several risks investors should know about. Earlier this year, the founders received ED summons. The company has also disclosed ongoing consumer protection cases, labor-related disputes, and food safety proceedings in different states. Now, none of these automatically makes Zepto a bad investment. But do they remind us that the fast-growing companies often come with risks as well? Yes. So when you look at Zepto today, you see two stories at the same time. On one side, there's rapid growth, a massive market opportunity, strong investor backing, and the potential of significant upside. On the other side, there are large losses, intense competition, and regulatory challenges, which bring us to the big question. If you had a fresh capital to invest today, would you buy Zepto at rupees 40 before the IPO and take the risk of a potential upside? Or would you wait for more clarity on profitability and these regulatory concerns? Let me know in the comments. Meanwhile, keep watching SharesCard.